Today, folks, as I do on my financial independence to one day perhaps retire early, I'm going to deep dive down into my almost 300K portfolio just to give you guys some updates on some of the individual accounts, how I'm utilizing them, and just where generally things sit. And then I want to more get into the iterations of different investors that exist out there, because lately there's been a clash of many investors, and I've noticed eventually you kind of merge into becoming almost a little bit of each of the investors we are going to talk about. So in the clarity of my transparency, hit that like button, folks, and we got to start by talking about the corporate account, my newest account, the account that I will be utilizing probably in perpetuity for quite some time until I can scale this with many of the tech stocks I have mentioned related to AI, with the big ones like Amazon, Google, Tesla. We got some of that already underway. I've also got a couple dividend stocks in here because we've talked about Algonquin Power as well, but this is total account today is worth about $36,000. And we can see that, considering I only opened this account, like a month ago, everything is doing really well for the stocks that I've been buying, considering I've been buying them at relative all-time highs, right? When you're talking about things like Tesla, I was picking up a little bit of a dip, but I'm really only picking it up from where I sold it out of my other account after watching it run to like 900 a share, and it's just baselining flat right now, which is something I'm kind of projecting into the future for some time. But we still got Facebook, which I recently bought back. I'm up $447 on this position, so anybody that bought Facebook under hopefully listens to what I say, because I'm like, hey, you should be buying Facebook at 150, 200, 250, 300, 350. Everyone keeps asking me when to buy Facebook. Just buy it. Just buy it. Same with Google, right? So I picked up my starter Google shares, which are just kind of flatlining a little bit here, up $33 from last week's purchase. So this account is where we're going to be primarily focusing in the future. Now, in my other accounts, my primary dividend account that I've been gradually reinvesting over and over again, and I've got some dividends coming in, but the next big dividend payments coming in for July are going to be the reinvested ones, because we're getting another 453 CAD and almost 200 USDs, and that's when I'm going to take that money and continue to allot it into the utilities, because like in my my corporate account with Algonquin, in this account I'm really focused on Hydro One, and that is just a pivot into the scaling economy and real estate that's going on in Canada. I really like these positions just for overall reliable income and dividend compounded rates of return, because a lot of these utilities are doubling their dividends every 10 years, which is super awesome, right? But in this account, primarily where the best returns are coming from right now, gotta be Microsoft. Microsoft Azure and just everything with Xbox, a lot of the stuff that I love, really come into this company, crushing it lately, and it's kind of incredible to see the starter position I have here, and just my starting yields. I wish I bought more, guys. Same thing with Apple. Like, I wish I had a little bit more instead of scaling them down over time, just at this point to get better dividends, because I didn't realize I'm getting almost a 5% yield off Apple here, and I'm also getting about a 2.17% yield off Microsoft, which I don't think anyone's going to see for a long time at the compounded rates of growth these suckers are having. And then finally, for the first time ever, I've started utilizing dividends to pay some of my bills. Not something I've ever really planned on doing, but in fact, literally in the several years I've been investing, a couple days ago was the first time I ever did it, because I'm trying to keep this account flush away from my personal income. So I'm trying to keep all my money in the corporate account and utilize it as much in the corporation as possible for the rest of this year. So I've been trying not to take too much personal income, and basically all the dividends that come in this account are personal income, and I've basically just been using it for my fun money most of the time, or the off time I have to fill my gas tank, which is pretty nice because it's about $1,741. I mean, I'm getting $264 in July, and maybe I'll reinvest them at some point, but I think that's just kind of interesting because I've never done that before, and it feels interesting to pull money out of an investment account and just put it onto a credit card. But so that's new to me, but that's kind of where my accounts are at. I know this isn't like an in-depth look this week, just primarily because I've been insanely busy and I'm just dealing with a lot of contracts that are making it complicated to calculate the total income on these spreadsheets as it sits for this moment here, folks, which leads me into what I want to talk about, because a lot of you guys in our chat groups are split into many different directions. And I always find these conversations coming up a lot about what kind of investors we are. And I noticed that a lot of people always, especially newer investors, kind of pick a category. And we're going to talk about each one of these categories very briefly, but obviously there's the dividend investor, right? Like that was like the bread and butter of my investing career in the beginning, but you start realizing as you scale, maybe a diversified portfolio is a little better. But what people don't understand is they keep looking at like the 4% yield on the dividend, and they think that's like the pinnacle of what the return is going to be. But if you're not utilizing those dividends today and you don't need to retire, you got to remember that you want to reinvest those dividends because again, that'll equate to a much grander total return. And I don't think people often enough look at the total returns, especially if you're not relying on that cash flow today, which we can see here, guys, over a 30-year period. A very simple $1,000 investment becomes 10 grand relatively quick. And I mean, when you look at something like an Algonquin Power or a Hydro One that are compounding the growth over 100, they're doubling the dividend every 10 years, right? So if you're reinvesting that dividend that starts at 4 or 5% over that decade, plus those dividends double on top of that, before you know it, you're making like a 15 or 20% yield in a roughly compounded period of time, which becomes very good for early retirement, in my opinion, if you've got a 15 or 20 year time horizon. The other hand, a lot of day traders, got to talk about the day traders as well here, folks, which is something I did more this year than I've ever done. I mean, I was swing trading companies literally within hours. I was buying and selling some, and then there was some like Baba I was swing trading, and relative success to all of this. And I think that's only because I was able to implement strategies that we've seen here. And there's tons of people in our chat group that love, getting their feet into options and day trading and just swing trading in general. And I think it's a great thing to learn, because to some degree you might find a quick flip. It's like we see in some other investment industries we're about to take a look at, but this is one that really core focuses, I find, on much newer investors, because when you watch things like Jimmy or Dogecoin, it's kind of hard not to get excited. I mean, it's kind of like gambling, right? And then the other half is, I'm going to call the passive strategy of investors. These are the people that are a little bit more skittish, don't want to put the time into individual stocks, don't want to listen to annual reports, and they want to be 100% passive. And this is wonderful investing, and that's obviously index funds, mutual funds, and just spreading it across the board without ever having to get up in the morning and having to sell or move companies that might be out of favor due to whatever changes in the business. So this is definitely one that I will be leaning into probably more into my 30s. But for the time being, while I'm 29, I really just want to build up my individual stocks, get that to where I think it's going to solidify my future, and then maybe focus on ETFs, maybe some more income dividend stuff, or REITs. Who knows? You'll have to subscribe to see where that goes. But ETFs are a definite class of investors I run into a lot. And then finally, we got two other ones here that kind of fall into drastically different categories. But of course, your gold bugs. And these gold bugs, as much as they don't want to admit it, I think are exactly like Bitcoiners. They kind of all fall into the same suit of philosophy when it comes to decentralization, control over your assets. They both have utilizations in certain industries for certain reasons. And I think they're just two wonderful things that I used to hate them. I used to own like $30,000 or $40,000 worth of gold, liquidated it all. Luckily, some of that money went into Tesla and other really great investments like Apple, Microsoft, etc. So I definitely did a much better return than holding the precious metal assets. But to today, here, folks, I still do own precious metals to some degree. I think it's great having assets that are decentralized away from the government and fully in your control to varying degrees, because it's an appropriate thing, I think, at scale. But your gold bugs you'll run into, and these are people that usually don't pertainably like stocks as much as they like the decentralized assets, right? And then finally, your real estate investors. And I've noticed every real estate investor out there usually takes real estate over stocks, but eventually becomes a stock market investor. I mean, you look at people like Meet Kevin, right? He used to be all real estate. Graham Stephan, all real estate. But the stock market's a beautiful place that eventually sucks everybody in. And I think they're all great classes, because most people that don't have enough money to invest in real estate start by saving money in stocks. Good short-term investments for 3 to 5 years while they stack up a down payment. I've seen many YouTubers out there do this, and people in our chat groups, where they just utilize the stock market for a short period of time to make larger investments in what they believe is more stable, like real estate. But all of these things, I think, honestly symbiotically work together. And at any scale of a portfolio, once you reach scale, and that's probably once you get into the 6-figure range, you start realizing how you have access to more and more of these investments and why they become more suitable for your portfolio, why I want to pass the question off to you. What do you guys think about all this different information here about what kind of investor you are? I want to hear what kind of investor you are in the comment section below. I'd love to hear about it, folks. But in light of all this, just a fun Sunday video, isn't it? Stay cool, stay awesome, and I look forward to catching you tomorrow.